You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tunage means it's time once again to rock out with the option block. My name is Mark Longo, coming at you live every Monday and Thursday, noon Central, 1 p.m. Eastern. At least for this show. I come at you at other times for other shows, but for this show, noon Central, 1 p.m. Eastern. You know how to get it. You want to get it live in your ear holes. Mixlr.com is the place to go. Grab that, set it, and forget it. Or, of course, you can join us after the fact on your podcast player of choice. We don't judge. However you listen, live after the fact, hit us up. Questions, comments, insights, pearls of wisdom. We do, yes, we do, like to hear from you folks out there. And joining me on the old program today for this kind of weird, topsy-turvy market we find ourselves in today. First, let's go out. When it's topsy-turvy, we like to go out to quiet, peaceful, tranquil hamlets. They calm us down. They give us some time to reflect. So let's do just that. Let's go out to the quiet, tranquil hamlet known as St. Charles, where we are joined by Uncle Mike Tosaw from the appropriately named St. Charles Wealth Management. Uncle Mike, welcome to the show, sir. How go things in St. Charles?
All is well, all is well. Happy to be here. A little bit chilly today, but let's heat things up with the action of this show, why don't we?
Let's do just that. And also joining us to heat things up, he likes a good spicy meatball every now and then. He is the greasy meatball, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. That's Carmen with the K. Spell it right out there. Mr. Meatball, how go things? What degree of spiciness do you like in your meatballs, sir?
You know, it really depends on who the audience is. You know, my despite the Italian blood, my aunt, she looks at a red pepper and starts panting and sweating. But you know, for my personally, I like to add a decent amount of that crushed red pepper. I think it's additive to the overall flavor.
It's got to have some spice. Otherwise, it's just no fun.
It really does.
If it's bland, that's why I always lean more towards the southern Italian cuisine, the penne arrabbiata, all the stuff that has a little bit more spice. You start going up the peninsula, it gets a little more bland, a little bit more staid, a little bit more Germanic in its flavors. Not my cup of tea. Yeah. I like the spice.
We were all Sicilian, so we kind of a totally different.
I knew I didn't trust you, and now I know why. Sicilian. There you go. What's the old Princess Bride line? Never go against a Sicilian when death is on the line, or something like that. something along those lines. And of course, there's the entire Godfather oeuvre. But I digress. Let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. And it's one of those days where it's one of the reasons why we don't prep for the show too far ahead of time, because you never know what the hell you're going to get. When they started writing up this show earlier in the session today, the VIX was shy of the 15 handles and the 14 handles. Markets were rallying. It seemed like the trade war was maybe a distant memory. Now a worm is turning. Maybe not so much here on the trade war done deal front. We're seeing most of the major indices now into the red and off aggressively. The Dow leading the dance to the downside, off over 1%, about nearly 1.5%. That's after having started the day up. So when you factor in erasing the gains first, all these indices actually off even more here. The S&P off about 1.1%, and the NASDAQ about a similar percentage drop there. Of course, that means our old friend VIX Cash now north of the 16 handle, about 16 and a quarter out there, up about 1.5 handles. Just what a crazy topsy-turvy day. And it's this kind of, I guess it's appropriate. It's kind of emblematic, because I don't know if you guys know, but almost exactly a year ago, about a year and 2 days, because it was March 2nd, we kicked off this whole crazy trade war dance with Trump's now infamous tweet of, trade wars are great and they're easy to win. So we've been in this that tweet world ever since, and it's kind of been nothing but topsy-turvy madness and indeed the return of volatility ever since. So first, let me say to both of you, happy 1-year anniversary of not quite the official trade war, but the kind of awakening of it. So there you go. Happy anniversary to both of you, and an inauspicious one to say the least. Oh
yeah, for sure. What a great day, huh? What a great day to remember.
This kind of reminds me a little bit.
Trade wars are easy.
Yes, trade wars are easy.
I believe wasn't that an '80s movie starring Gina Davis?
It was, and Jeff Goldblum.
And Jeff Goldblum,
the Goldblum Davis years, great years.
Yeah, with the not downtown Julie Brown, the other Julie Brown.
The other Julie Brown. Yes, who can forget the legion of Julie Browns that dominated the '90s? Oh yes,
yep.
So many good things. But you're right. It has been kind of a year of this kind of madness, and it's funny. I got a whiff of the vibe we saw. Remember going into the Brexit vote where, it's a done deal. It's not going to happen. Holy crap. It seemed like we got a little bit of that rug yanked out from us this morning, where everyone was it was such a done deal, right? That this thing was going to be done. And then apparently that ain't the case. So Mr. Meatball, let's start with you. What's catching your eye out there in this weird topsy-turvy 1-year trade war anniversary?
Yeah, just, it felt a little bit buy the rumor, sell the newsy today. And then you've got people worried that it's not a good enough trade deal. And next thing you know, a market that's basically gone straight up is getting a punch in the face a little bit today. Does feel a little one-off-ish, as a lot of these have been. But then again, you never know. I mean, maybe we're going to completely, tank going forward. But it just feels a little, all these sell-offs the last couple of months have been pretty one-off-ish.
So you're not buying what the market is selling today, sir?
I'm not quite there yet, I'll be honest.
VIX is moving. The futures are up, obviously, so they're pricing some of the same.
It was a fast move in VIX.
Yeah.
It is, which, obviously lends some credence to, maybe they're worried about something, but I don't know. That seems pretty darn fast for the speed of the move. I just think is a little over the top. You know
what it was? The market was getting too excited that VXXB was going to break the 30 handle again, and then they said, no, can't have that. And now exactly. It's back up exactly pretty much 2 handles, which puts it pretty much exactly 2 handles away from the 30 handle. So we know once we cross that 30 handle, there's too many happy faces out there, so it has to go back up. That's what happens, and has to do so post haste apparently. It is madness out there. Uncle Mike, sir, in the midst of this madness, first off, happy anniversary to you, and B, what is catching your eye out there today, sir?
It's an exciting anniversary by all means. The trade wars are crazy anniversary. Gotta love it. In addition to what you guys just said about the VIX moving as fast as it did, I just want to add 2,800 has been a key number. And if we just have a hard time getting through there and staying through there. I mean, we rallied above it for a while last fall, but the 280 on SPY, 2,800 on the S&P, we've had a hard time with that number of getting through there. So, I'd love to see us get through there. And there's really, you could argue in the 2,900, the low 2,900s is where the next level of resistance would be. But 28 is one tough number from the standpoint of the chart. And then, of course, the other thing, the exciting news that Southwest Airlines is now flying to Hawaii, and Hawaiian Airlines, I imagine, doesn't like that too much. So we have that going on.
I can't imagine they would.
No, not at all, not at all. And this is ultimately the trade war, and 2,800, I think, is what, as I'm looking at this and what's lighting up my tape, besides the crazy VIX today, which is kind of interesting, but the two main things that I'm continuing to look at are just the trade war information, along with 2,800. Can I say 2,800 again 4 or 5 more times? 2,800, 2,800.
I think you can.
That's the other side of that, VXXB flirting with 30. When the S&P flirts at 2,800, it also has to amazingly quickly retreat from that as well. So I think it's the combo of those two.
It actually settled to, 29.98 on Friday.
Just to tease Uncle Mike.
All those puts went out 2 cents. But yeah, pretty spectacular the way everything worked out and moved. I mean, just pretty funky. I'll be honest.
Pretty funky. Let's see what's lighting it up in this funky day. Now, these index numbers are about a half an hour before showtime, so there's more on the tape now, obviously. But still, they were very firmly aggressive even by then. VIX was just at about 600,000 contracts, which is a very active day out there in VIX land if you've been following along. The ADV out there is only 485, so the ADV is shy of 500,000 contracts. And there already had, about half an hour ago, been 600,000 contracts on the tape in VIX land. So things were lighting it up. Not surprisingly, index is where the action was today. SPY had about 1.7 million contracts on the tape of leading into showtime there. ADV is about 2.5 million out there. SPX doing 708,000 contracts. ADV a little bit north of a million, 1.1 million. The Qs at about 526,000 contracts. The ADV about 650. And even the Russell had about $1.70 in terms of IWM, at least on the tape, with about 334,000 contracts going up out there. Let's look at what's going on, in the most actives on the equity options side as well. And we're seeing Apple dominating the charts today, which is kind of interesting, with 362,000 contracts on the tape. We're going in reverse order, so I'm going from the top to the bottom this time, just to mix it up a little bit. Number 2, Lilly, with about 281,000 contracts on the tape. Number 3, Tesla. They're talking about the $35,000 Model 3 and then also the new crossover Model Y, whatever they're calling it out there. So those two things lighting it up in Tesla land right now. Number 3, 274,000 contracts on the tape. Number 4, good old Facebook, $1.85 on the tape. Number 5, Bank of America, 176,000 contracts there, followed closely by Amazon. Number 6, $1.75 there. Number 7, good old NEO. Talk about those Chinese names still lurking up there, about $1.50 on the tape there. Number was at 8. GE, 148,000. Number 9, good old Widowmaker Netflix, $1.45 on there as well. Number 10, our other Chinese name, JD, with 143,000 contracts. Let's see if there's any crazy biases to the calls or the puts in any direction. Looks like JD, again, heavily biased to the calls. 78% of that paper going on the call side. It's been kind of a call frenzy out there of late. And today is the same. Apple, though, hot on its heels, about 2/3 of the paper, 66%, come in the call side. About 250,000 calls on the tape. So very active call day. Let's see really quickly where our old friend, the fruit company, is trading right now. Off about 1/3 of a handle there, right about 174.5 or so. Still, that 150 level we were all hand-wringing about not too long ago. A distant memory there in the rear view mirror out there. Now, I know everyone out there, you guys are all excited. Uncle Mike and you, Mr. Meatball, as well, are all excited, of course, about the forthcoming big IPOs of Uber and Lyft. They're racing each other to see who can get out of the IPO gate the fastest. And now, I guess, if you want a piece of that action, I guess you guys should have been driving. Lyft, at least, announcing that they're going to allow some of their drivers, longtime active drivers, they term them, to award them who've logged at least 10,000 rides with they're not going to give them shares. They're going to give them access to buy into the IPO. So that could be a dubious honor. We don't know where this thing is going to price. And also, how many Lyft drivers really have spare cash to participate in an IPO? It's kind of the reason they're doing Lyft to begin with, right? But there you go. Does this change your mind about the forthcoming big IPOs, Mr. Meatball or Uncle Mike? And are you all now planning to become drivers in order to get a piece of this much heralded IPO action?
You know what I'll say is that I got in the back of either an Uber or a Lyft, and the driver was telling me about how they trade cannabis stocks throughout the day. So, and I've been how many taxi cabs have you been in where the guy's talking about how he trades Forex? So, I got to be honest, this may actually hit closer to home with these drivers than maybe we're first letting on. I think it actually makes a ton of sense, and I could totally see a Lyft driver taking, a big, huge chunk of their life savings and putting it into Lyft shares pre-IPO.
Well, hopefully, yeah.
That's not that far out. I think you're right, Mark. I've never really thought about that before, but you're right.
Me being right? You've never thought about me being right. You heard it here, folks.
Never, ever. No, but you're right. And that what I've never thought of is how I've had a lot of conversations with cab drivers about trading the spot Forex. And so I think I can vouch for Mark on that. Whenever the cab driver says, "What do you do for work?" and I tell them, it often does go back to the spot Forex. Now, I think you're absolutely right. I haven't had a lot of experience with them in the cannabis stock side of it. If you go to these NFL retired player golf outings, that you'll hear a lot about that there. But in the cabs, I will vouch for Mark. I have had a lot of conversations on spot Forex with cab drivers.
If you want an expert on either global politics or the markets, nowhere better to go than the backseat of a cab, or these days an Uber or a Lyft. They know everything about everything, so they're very wise folks. And maybe some of them will be inspired to take part of it, even if maybe they don't have the finances to do so. Hopefully, if they are going to do so, they also understand a little bit about hedging and don't have all of their life savings in an IPO that could, as we've seen some of these IPOs, the pricing not always the best. They could get a price that perhaps not as attractive after the opening bell as it seemed. Speaking of anniversaries, we were talking earlier about the 10-year anniversary of the trade war. Also, 10 years ago this week, it marked the bottom of the big financial meltdown in March of 2009. Uncle Mike, you just talking about 2,800 in the S&P. Our low back in those dark, dark days, 666, inauspicious to say the least, the number of the beast. Also, marked the downside of the S&P. That was on March 6th of 2009. Since then, in that 10-year period, you got a 10-year annualized total return of nearly 18%, 17.8%. That probably sounds pretty good to you, but it also matches pretty much very close the annualized returns of 10-year periods after other big market meltdowns like 1987, which returned about 17.2% in the subsequent 10-year period. The August 1982 bottom, which returned about 17.6%, maybe even factoring in that crazy 1987 period. That's when the greatest modern bull market began. So a lot of interesting data for those of you who are statisticians out there. And looking at some of these other market trough and rallies and how much they returned over time. Now, people might be saying, okay, this bull market's getting a little long in the tooth right now, even though we did have a sell-off last year. But they point out in this article as well, if you're thinking about getting the heck out of Dodge, if you did so in these other cycles right around this period, around this 10-year mark, it's not typically the end. It usually goes for a little bit longer. Obviously, those final couple of years don't mark the same blow your doors off, knock your socks off types of returns as the early parts, because percentage-wise, it just can't. But still, you do miss out on some of the returns towards the end there if you did jump ship before the final couple of years. So if they look at other periods like in 84, 92, or 97, there was a period of time before the major declines, up to 3 years. So if you missed those periods, the returns were positive, not stellar, anywhere between 7 to 14% a year. So you did miss out on some upsides still. Again, if you're feeling top heavy, don't listen to this. Get the heck out of Dodge or hedge yourself. But in general, just interesting nuggets we like to have as we're looking at the market, giving us a little bit of frame of reference here as we keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, let's get weird. Let's get funky. Time for the odd block. Let's see where our Eye of Sauron is drawn today. There's some size paper going up today, as you might imagine, particularly out in the indices, but usually our Eye of Sauron is drawn to the equity options. That's the single names. That's where we find a lot of the more esoteric paper out there, including our paper today, kicking things off in our old friend Bud, a.k.a. Anheuser-Busch, trading right now 81, pretty much even, off nearly a buck or about 1%, a little bit north of 1% today. Let's look back over the past year in Bud, see what it's been up to. A year ago, things were looking rosy in Budland. It was trading 112, almost 113, so substantially north of where it is right now. Then pretty much the entirety of the subsequent year was a long, slow slog to the downside. A little bit of a spike. Got down to about 93, then a spike back up in the summertime up to about 103, 104. So I had a little bit of sign of life around the early to midsummer. Then that was pretty much it. It's been long, slow slog to the downside ever since. It has traded lower than where it is right now, including, of course, in the infamous nadir for most names around Christmas Eve. It hit 65 out there in Budland, and then it's had a nice, decent near-term rally, as a lot of the market has as a result, up about 15, 16 handles since then. And let's see what our Eye of Sauron has drawn out here today, including recently. It was trading 74 just last week. So this thing's had a nice spike just in the past week. So some near-term love, I should say, for Bud. Let's see what the market has in store today. And it looks like it might have been some call love or maybe a bit of a funky roll. Let's see. What first came across our Eye of Sauron was a big block of the SEP 70s. 15,000 of the SEP 70s going up for 13.5, pretty close to the offer. They were offered at 13 double, got them for 13.5, 15,000 times. Excuse me, opening. As you can tell, still not 100% recovered over here, listeners, but we're powering on nonetheless. 15,000 of these bad boys coming up near the offer here, opening on the Philly. So we saw that, and that looked like that was it. And then we did a little bit more digging. We saw another trade going up right around that exact same time, not marked as spread, which was probably why it didn't come up on our scanners initially, but went up right around the same time, about 10 seconds later, was 15,000 of the March 70s. Also going up, these going up a lot closer to the bid for 1120. These were 1105 at 1160. Those were not opening. So it has all the width of a roll, which makes this paper even weirder across the board. So if someone did decide they have 70s, so these are now 10 plus handle in the money calls, you got some, they worked out pretty well for you, it sounds like. Let's take some money off the table and roll them. What does he do? He rolls them back out to the 70s in September, which is interesting, I think, to say the least. Didn't take his money off the table. In fact, he put more to work, $2 more, pretty much $2.30 more. For this, if indeed it was a spread. Didn't go up marked as a spread, but if it looks like a duck and it quacks like a duck, sure as heck looks and seems like a duck. So a lot to unpack here, Mr. Meatball. Are you buying that this was a related paper? Certainly seems like it was. And then B, if you're rolling, if you have calls that work your way and you're buying yourself more time, why the heck don't you take some of that money off the table and go a little bit farther up the strike chain? So I don't know, maybe 80? Instead of going back to the 70 strikes. They're kind of weird paper.
Yeah, the roll makes sense. The maintaining, I guess he theoretically reduced his delta a little bit, right? But it just paid up for it. I don't fully. Yeah,
is that worth 230 to reduce your delta?
No,
I don't know about that.
No, it is not. So I'm a little befuddled by the action of the paper, but. It definitely does smell like it's, a absolutely related paper, and probably probably somebody, maybe it's against a short position or something like that. Like, we don't know. Maybe he really needs this exposure. It could be all hosts of things, but I don't know what to tell you. It seems a little odd.
Yeah, that's why we call it the odd block. This thing goes your way, listeners. It works. So take some of it off the table. Go up to the 80 strike. You still got all the upside to go. You have very much less of the downside because you took it off. This guy's sitting on all this money again on the 70 strike. This thing turns around. He's effectively got close to stock now. It's just going to wipe out a lot of his gains. So yeah, take it off the table if it works your way. I mean, yeah, he could be a reason he needs this, but he could if he's short. He could still be very happy with the 80 strike covering any shorts. He doesn't need those 10 extra in-the-money handles. It's not getting him anything but pain and a lot of cost. So, yeah, this seemed like a savvy one until we uncovered that second leg, and then it just seemed like all sorts of weirdness. Right in. Why would you, listeners, keep your same exposure on the same strike? Usually the roll is up and out. So he went out. He just didn't go up. So, weird. He really likes that 70 strike. I guess I thought this guy was closing, but I guess now we need to keep this in the to be watched category. So we're not done with Bud. See what the heck see if he rolls the 70s again. The stock's at 90 maybe by the time September rolls around, and he's going to keep that 70 strike. He wants 20 handles in the money next time. I don't know. Weird stuff abounds, but hey, that's why we call it the odd block. Listeners, let's keep on rolling. This is a newcomer to the odd block, I believe. This is Workday Inc. Ticker symbol WDAY. This is not, sounds like it's a WeWork competitor, but it's not. They're an on-demand financial management and human capital management software vendor founded by some former PeopleSoft guys here. This one, 178, almost 179 right now, off about 10 handles or about 5.5%. So not a good day for Workday out here. Let's go back a year, see what's up. It has been a good year, though. A year ago, they were trading about 133. So about 45 handles shy of where they are right now. So they've been on a nice upward swing over the better part of the last year. In fact, a 50 handle rally since about November of last year. They got down to about 124. Yeah, 124. Now they're 178, almost 179. So a nice rally out here in Workday over the past couple of months even. So let's see what our Eye of Sauron found for us out here. And again, more weird paper. Excuse me. Not marked as spread, going up at the same time. And also weird strikes. So getting a little bit of deja vu here. Let's see if this guy had the same disease as our other friend there did. Let's see. What first caught our eye was, again, SEP calls. That's kind of what triggers us on all these things these days. 12,582 of the SEP 160s going up for, get this, listeners, $37.50. Kind of meaty. Those calls, $28 in the money, or actually $18 in the money right now. But there's some meat going all the way out there to September, particularly in a name that's added 50 handles in the last couple of months. There's going to be some vol out there. 12,582 of those for 37.5. This market, as you might imagine, was fairly wide. It was about 36.80 at 39.30. Not a lot going up on the SEP 160s in Workday. So this was opening paper in the SEPs. And this was also accompanied, when we did a little bit of digging, by some March paper. 12,582 of the March 140s going up at about the same time. This is about 20 seconds between the two, also not marked spread. So these brokers are getting a little savvy these days, trying not to make their stuff too obvious for us, I guess. Again, these went up March 140, so very in the money, 38 handle in the money calls. 44.75 for these bad boys, which is pretty much right on the bid, exactly. Also 12,582 times. Go figure, that's not opening. So it looks like, Mr. Meatball, we got another up, and this guy actually went out. So he went up. He went out, I should say, and up. His guy actually went up, so that's a little bit nice to see. So we got another roll of some meaty calls. These 140s were pretty far out of the money. Again, they were 20-odd handles almost out of the money back in November, and now they're $45 calls almost. So this thing has had quite the rocket to the upside. Our friend keeping the bullish love alive, listeners, but going up Still going up fairly in the money, 18 handle in the money calls, but keeping the level alive to the tune of the SEP 160. Mr. Meatball, this is another weird one. This has got to be related roll paper here. But again, strange strike choices. If you're sitting on all this, you're sitting on all this money that you made on these calls. Why are you going to risk another 18 handles of it by going to calls that are nearly 20 handles in the money? Wouldn't you go to a little bit different strike choice, sir? Is this one as head scratching to you as it is to me?
I probably would, but he probably wants to maintain a strong delta exposure. So, he's taking some money off the table, obviously, but he's keeping a really strong delta exposure. So I think that's what you're dealing with when we're looking at this trade. More time, same delta exposure. So he's a Workday believer. He's like a monkey. He's a believer.
He is a believer. I mean, he did that whole spread for like $7. So at the end of it, if this goes against him, he only made $7 on these calls that went nearly $50 in his favor.
What did he initially pay for him would be my question.
I'll have to go look and see when he opened them. But
probably not a lot.
It wasn't $45. I would pretty much wager that.
No, it was not.
But still, not taking some of these profits off the table. I get maybe you want some delta exposure. I get it, but I don't know. That's a lot of meat to have still on that bone when you've already rallied 50 handles. Because guess what could happen when you got that delta exposure? It kind of cuts both ways, and now let's say it goes back to 150. It's still a good run for this name recently, but hey, you just took a lot of that money you made off the table again. I don't know. These ones, Mr. Meatball, I'm going to have to mark this one now to be watched. See what these people are doing to us here? They're making us watch all this paper. Got to see what these scrubs are up to out here with their deep in the money rolls. I don't know. Weird paper abound. Let's see if we could wrap it up on a little bit more straightforward stuff here. Where are we drawing our last name here? Who are we looking at? Let's see. This one is SandRidge Energy, ticker symbol SD. This is a little bit more reasonable, only 8.25 today. This is the name that has traded, let's see. A year ago, they were trading nearly 2x. They were trading about 15 and change. So they had a good run. They got up to about 17, not quite. Oh, they got over 18. About 18.25 back last summer. So they had a nice run up to the summertime. And then August came around, and that was kind of all she wrote. Sold off to $11 by early September, and then it got down to 8 and change in late October. And then in the dark days of Christmas Eve, down to 7.25, 7.07 actually. So actually, it broke the 7 handle, 698. So it's been a long, strange trip for SandRidge. Seems like it's kind of even out now near the bottom of that trough, around 8.25 or so right now. So what did our Eye of Sauron find? It looks like it found nice, refreshing, straightforward paper to wrap us up here. It's like some call love. July 10th, it's going up for the old double, a.k.a. 55 cents here. Actually, through the offer, they were 35 cents at 50 cents. He went up. He paid up a nickel to get it all done because, go figure, SandRidge is not doing a ton of paper, so you got to get 4,000 done. Maybe you got to go through a little bit. But he got it all done for 55 cents. This was opening, and this is all, looks like, there's earnings today after the bell here in good old SandRidge. So a bit of an earnings play here, as well as just some extended upside. If you're looking at this chart, it's hard not to see that 10 isn't a crazy bridge too far. Bit of some earnings juice in here, though. These are a little rich, but not terrible. Mr. Meatball, this is a little bit more straightforward for us here. Just your good old-fashioned pre-earnings upside call love. What are you thinking of these SandRidge calls, sir, for 55 cents?
I mean, it makes sense. It's, if SandRidge goes up, then, this guy's going to be happy. It makes lots of sense.
Is that how that works? Okay.
Yes.
I was confused. I thought it was the other way. I thought I had it backwards all this time.
You tend to see this type of paper with earnings on the table. It's not. I'll be honest. I'm not surprised that this paper went up.
If it makes dollars, it makes sense. Unless it's in the case of our other two big spreads.
I like that.
Unless in the case of our other two big spreads, where all it does is just lead you to another beefy leg that's deeply in the money, and all of your same exposure is still there. So who knows? Let's tell you what. We'll be charitable. We'll be nice to all of these. We'll mark this one. We'll mark all three of these bad boys to be watched. We'll keep an eye on them, see how they perform. and we'll come back to them in a few weeks or a few months, depending on the duration of these different contracts, and see how they're doing, listeners. Meanwhile, though, it's time to see how Uncle Mike is doing with a little bit of the old block of strategery.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, it's that time, listeners. We're the option whisperer, a.k.a. Uncle Mike, a.k.a. the guy who's glued to 2800 and ignoring all else, friends, family, food, bathroom breaks. Forget about all of it. 2800 or bust for Uncle Mike. Uncle Mike, sir, in the midst of the rally to 2800, what do you got in store for us on the old block of strategery this week, sir?
Ironically, it's 2800. How ironic is that?
How could I possibly know?
So what I want to do today is talk about how trading based on a breakout can be very beneficial in risk management. So here's what I mean by that. There is a certain number that I'm kind of looking at right now as kind of a breakout. Shocker, it's 2800 or 280 on SPY. Now, first off, I want to say that if it's exactly 2800 or 280 on SPY, I'm not looking at it as an exact number. So in other words, if we were to close at above, let's say on SPY at 279.99, I might look at that point. And but the point is that I want to be kind of like a general guideline, plus or minus a few pennies is all I'm trying to say with it. So with that being said, what's a way with which you can manage risk when you're trying to trade against a breakout? Well, let's oversimplify everything for a second. Let's just use stock. Let's say that I've had a nice rally in SPY. I've owned SPY. And by stock, I'm just referring to, let's just use SPY. So we'll use the underline. And you know what? We took profits at like the 273, 275 level, let's say. That's not the case with me, but let's just say it was for a second. And I'm like, you know what? I want to take profits on everything. Now, typically, I don't recommend doing that. I recommend scaling in a lot of sections. But for sake of simplicity, for today's illustration or for today's strategy block, let's just assume we sell everything at 275. And so with that, what I like about this isn't necessarily a technical thing, although I am being somewhat technical with this 280 mark, because if you just look at how many times we've had trouble crossing through it, I think it is a very technical analysis. But even though it is somewhat technical, let's say it's not. And I am just drawing 280 as a line in the sand. I pulled this number out of a hat, let's say. Now, how can I actually use this for risk management? Well, here's how. Let's say that I'm 100% in cash and I've taken some profits. If the market stays the same, well, I'm not missing anything because my money's in cash. I might even be earning a little bit of interest. Now, by a little, it really is a little these days still. Yes, interest rates have gone up, but not that much. So we have that in play. And so while the market's not doing anything, your money doesn't necessarily need to be doing anything. If the market goes down, of course, you're a genius because you sold the top. But with that being said, how can you actually trade a breakout from not necessarily so much a technical standpoint, but from a risk management standpoint? Well, one thing with which you can do is you can say, okay, I want to look at 280, and 280 right now is my line in the sand. At that point, once we cross the 280 mark, that's when I want to get back in. That's when I believe that once we close above 280, whether it's for the day, the week, whatever way you want to call it, that's when I'm getting back in. So one way with which you can do that is that one way to think about this is that no matter what you do with risk management, there's always give and take. You're never going to always sell the top and buy the bottom. It doesn't work that way in real life. But let's say that you're waiting for this little bit of a breakout. Here's what this opportunity could do for you. If the market does pull back after you take profits, of course, you can also have a downward area with which to get in, say 270. Say, okay, if the market pulls back to the 270 level and I feel it's somewhat stable at the 270 level, then maybe get in at that point. Or let's say it just drops like a sharp falling knife to 270. Whoa, 270 really doesn't look so good anymore to me. So I think I'm going to wait this out or maybe readjust my numbers. The opportunity comes when you're in cash. See, when you're in cash, you actually have full control of your money. The market has no control over your money when you're in cash. So by being in cash, you have some type of control to where you can get in at your leisure, let the market come to you if that's the case. Now, of course, the downside to this style of risk management would be, okay, it gets back up to 280. I'm getting in when it's at 280.46 or 21 or whatever number you want to use. You get in, and then immediately the market goes right back to 275. And you're sitting there thinking, oh man, that was dumb. So you have to be prepared for that type of pullback to happen, because it will happen at some point if you ever use this style of risk management. So ultimately, what I like to do when doing this is that if I am trading, if I'm trying to manage risk based on a breakout like this, what I would do is I would buy in once it closed, the day after it closed above 280, or look to buy in a day or two after, whenever I want to get in. And I think you have to have a really tight stop loss when doing this, meaning that as soon as it goes below what your breakout number was, then that means you're wrong. It was not the level you thought you were supposed to get in at, and you got to get out and then start from plan B, start over again with plan B. Of course, if you get back in and it continues to shoot to the moon, you can have your stop loss at 280, and it's at 286, 87, 290, and then you bring your stop loss up. You can do a lot of things with that, but I'm trying to prepare you for a worst case scenario. Winning trades is easy when the market goes your way. It's how do you manage risk when it doesn't go your way, to where you're going to actually have to work this out. So if you're just trading underlying, what I like to do if I'm in this situation would be get in once it does my breakout, but be very strict and have a tight stop loss. Now, of course, the disadvantage to this is that you're getting in, getting out, and you burn a couple commissions real quickly, but hopefully you're with a broker that doesn't really charge you that much. And this can be used for futures or stock. Now, how does this apply for options? Well, the benefit of potentially trading a breakout like this is that if we do go higher, then volatility will likely go lower with the inverse relationship. That's why it's important that you really have a good understanding about how volatility works. And if you take some classes that the Lobster and the Meatball offer, of course, they can help you with that. But what I like to do if I'm doing something like this is that if the market is a higher, let's say you deem the market to be at higher volatility levels and you want to wait till the market goes higher, I don't think it makes sense to buy premium at that point, because you're going to be fighting against vol until it goes up to a certain level. So by using the breakout style of strategy, let's say the market does go to your level, you'll miss out on a little bit of the upside, but of course, you're not going to have time decay working against you during that time while you're waiting for it to move. You're not having the downside risk while you're waiting for it to move. But most importantly to me is that you're not going to have volatility working against you when it's at a high vol area that you deem as high. Once again, if you don't deem the volatility as high, then this doesn't make sense. I'm just trying to give you a 10,000 foot view of this. But then if you're in a call before your breakout, what you deem as a breakout, you're going to have volatility working against you. So with that being said, yes, you're in cash. You won't miss out on quite as much because of the fact that volatility was not working against you while you're in cash. So it's something to think about in terms of trading a breakout strategy, in that you can sit in cash a little bit longer than you think you need to, and you won't miss quite as much because you won't have the Vega monster coming to get you. And that is my strategy block for, well, my 1 year anniversary strategy block for the trade war.
There's nothing worse than a Vega monster, is there?
That sounds scary, the Vega monster. I don't want the Vega monster under my bed at night. That would be
no.
That could come.
I think I saw that movie with my kid. Vega Monsters You.
Yes, that's exactly what it was. It was all about the Greeks and how they could come back to bite you. That Theta monster, really scary. The Rho monster, not so much, kind of out in the distance, but the Vega.
The Theta monster is not that scary once you get to about 3/4 of the way through the movie.
Yeah, that's true. All right. On that scintillating, humorous note, gotta love Greek's humor, listeners. Let's keep on rolling and see what you guys got in store with a little bit of your mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, let's see what you guys had in store. We asked you guys last week, kind of a quick and easy one going into the weekend. Just straightforward, what is your go-to options bit of strategery right now? Gave you a bunch of different choices. You guys chimed in with some of your suggestions. But in general, we gave you these choices of the long call or long put or long vertical. That was all one choice. Or the short call /put/vertical. Any of the above there could qualify. Or your fly or your iron fly or your condor. Or going for calendars and diagonals. And as you guys recall, listeners, in the early going, it was actually calendars and diagonals that were burning it up, which seemed interesting. It was not my first choice, but still interesting nonetheless that you guys were so gung-ho for yourselves some calendars and indeed some diagonals. Outside of that, as the numbers finalized over the weekend, it actually was the long call /put/vertical. I thought that would do a little better, and it did, to the tune of about 49% of you saying that's your go-to strat right now. And the rest were kind of split amongst the rest. 20% coming in for the flies or the iron flies or the condors. 17% going the calendar/diagonal route, so playing with a little bit of time. And 14% saying they like themselves some short calls and or short puts or just short verticals. They liking themselves some of that. So there you go. Interesting stuff going forward. Let's see. Here's a question. Question from Holscreen, or maybe Holscreen. They want to say, is it safe to say that a large amount of the options business is devoted to paying for puts? I think yes, it is safe to say. I've said that before many times on this show, that there are a lot of people out there whose pretty much the good bulk of their day is devoted to saying, how am I going to pay for this protection I have right now? In fact, Uncle Mike, what portion of your day would you say is devoted to paying for puts these days, sir?
What do you need?
I mean, for how much time I spend trying to figure out how to pay for a put option, I mean, whether it's a put option, protection, or something along those lines, I would say a pretty good chunk of it. It's hard to say, but a lot.
So do you agree with our listener here that a large amount of the options business is devoted to paying for puts day in, day out, sir?
Yeah, or trying to finance long calls. So one or the other. But financing premium, I would say, would be a very big chunk of my day. Financing premium in one way, shape, or form, because as a wise man once told me, it's good to get your juice for free.
Yeah, we could throw the calls in there too. I'll allow it. But yeah, there's a good chunk of this. People that's pretty much their day in, day out. And what we mean, listeners, is obviously not figuring out how they could lift the offer on a put and pay that money. That's not what we're talking about, obviously. We're talking about finding a way to finance that, offset the cost of that capital outlay. And a lot of times it could be through verticals. It could be through calendars and diagonals like we were talking about earlier, having some other legs that are selling premium against the long premium leg so that hopefully over time you reduce some, if not all, of that outlay. So you get your puts. Maybe you get them for free. Maybe you get them for really cheap. And everyone's happy at the end of the day. I think you're onto something there, Holscreen, that I think there is a good chunk of this business that is devoted to doing just that. Paying for themselves, paying for some puts out there. Let's see. Dana Mac. They want to know, I've heard a lot of talk about contract numbers, but how much dollar value is actually transacted in the options market? Interesting question. We mentioned last year, it was obviously a record year for contracts, pushing that 5 billion level out there, which the options industry hasn't seen in some time. But yeah, there's a lot of ways to break down the actual dollar amount that changes hands in the options industry on any given, day. There's, notional value, there's premium outlay. That's how OCC tracks it. They call it the premiums. I like that. We're going to talk about the premiums. These are the numbers from OCC for January of the premiums. I like premiums with an S. That just cracks me up. Sounds British. The premiums that were changing hands last month. So actually now February numbers are out. We don't have those, but January numbers are out. And we've got equity options, 80.2 billion changing hand in terms of premiums. Index options, 98.75 billion, that's with the B, in worth of premiums changing hands. Remember, there could be smaller contract numbers changing hands out there, but a beast like S&P, that's a big, beefy, meaty contract. Then you got ETF options, 28 billion in premiums, almost 29. Actually like 28. So a total, if you add all that up, it's around 207 billion with the B in terms of premiums that are going up out there. So that's in terms of, how much people are actually outlaying and trading on this stuff. I don't know, Uncle Mike or Mr. Meatball, have you guys ever thought about how much dollar value actually changes hands in a given day or month in the options market?
I mean, I usually hear it quoted in notional value, not in the amount of premium that's traded back and forth. I mean, that's more the way I'm used to thinking about it, because the call premium, that premium price is just the actual price. It's not, I'd be interested if someone could tear out what the insurance value is that trades back and forth. What is the EPOP that trades? Guys know what EPOP stands for? I'll bet you Mark does. I don't know about Mike. You know what EPOP is?
Sorry, I'm having a bit of a coughing fit. What was that?
EPOP, E-P-O-P. What do you think that?
I do not off the top of my head.
Estimated premium on
parity.
Here we go. Premium over parity. Premium over parity. Yes.
Yep. So that's an old market maker term that we looked at pretty much constantly the final couple of weeks of trading on a contract. Just how much am I eating every day that I need to cover?
The theta monster.
And how much do I need to trade between now and then? So, and especially the final week, you wanted to know how much premium you had left in your book and how to get rid of it as fast as you could leading into expiration. You had a big EPOP number. Expiration Friday was a scary, scary proposition. So that actually would be more valuable to me than I think notional value kind of tells you more than maybe the premiums, but and if they could figure out the expiration premium, that would be phenomenal.
Yeah, I like notional better, but I like saying premiums. That's why why I quoted this number.
I know.
That just brought a smile to my face. So I quoted the premiums. But you're right, notional is the way I usually think of it. If I'm thinking of the number, I'll hit up the flow master. That sounds like a bit of data he might have in his back pocket somewhere. But premiums wise, that's the number for, again, the outlay. Again, that's how much a $5 call, you spent $5 on it. That's kind of all goes into that premiums number. But again, that doesn't speak to what that call is, in the money, out of the money, how much notional exposure that could give you on that contract. So those are different beasts. I don't have the notional here offhand. But it's a good question, an interesting one, and maybe shall we visit it in the future. Meanwhile, let's keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, let's go. Uncle Mike, when you're not trying to pay for those premiums, what are you keeping an eye on for the rest of the week, sir? Premiums. Can I say it again?
Well, I kind of wish the number was the 2,600 because then I could say this is an Atari market. But unfortunately, my number is 2,800. So I'm looking at watching 2,800 very closely, continuing to watch any trade war information. And till then, I think those are the two big things at this stage. And Southwest Airlines, of course, now flying to Hawaii.
Are you telling us you're going to Hawaii, sir, by way of Oakland?
And then, of course, from Chicago to Kansas City to Salt Lake to Tacoma to Oakland to Maui or whatever.
Well, if the NASDAQ keeps going, you could be there's the 5,200 and then the 70, what was it?
7,800.
The 7,800. So we're approaching the Atari 7,800, right? That's which, by the way, the 2,600 was better than both the 5,200 and the 7,800. They were both garbage. Although my understanding was the 5,200 did have a beer holder.
The Atari 800, The Atari 800 XL blew the doors off all of them. That was more of a computer, though.
Well, nothing's quite as good as the Atari Jaguar.
No, nothing in life is as good as the Jaguar.
The Jaguar, otherwise known as the system that finally took Atari out back and old Yellered it.
That and the massive amount of Pac-Man carts they had to bury in a landfill, or ET carts they had to go bury somewhere.
ET carts in a landfill. And then there was Treasure Hunter. You ever seen the stuff on Treasure Hunter?
Oh, didn't they actually go dig those up? Didn't someone go dig those up? I think they did. On one of those shows, I think they did.
There are 2 of them that got handed out, and 2 did not, that are still missing to this day.
Oh, mystery. Ooh. Mystery Science Theater. Mr. Meatball, when you're not hunting for premiums and ET carts, what are you watching the rest of this week, sir?
So I am watching the market. Today has been interesting. We saw the S&P get absolutely scorched, and meanwhile, we've seen the NASDAQ remain pretty firm. Right now, the NASDAQ is doing about twice as good as the S&P, and three times better than the Dow. So I'm very interested in whether today's market action is kind of one-off or whether it has some legs. Right now, to me, it appears a little one-off-ish.
You know why NASDAQ's doing so much better? Because that's where all the juicy premiums are to be found. So
there you go.
You head out there to NASDAQ land, get yourself some juicy premiums. All right, you can check all that data for yourself, by the way, listeners. OCC is the place to go. Options Clearing Corp. They have all that good stuff. If you want to sink your teeth into how much is changing, how much is trading, we actually the numbers are just out now for February, so we'll get into those on the next show. Didn't have time today, but before we go, let's go back around the horn, see what is cooking with each of us here. Let's start with Uncle Mike, sir. If I'm intrigued by all these premiums, and I want to learn how to pay for them. And maybe while I'm at it, I want to also click on a Fox. Where should I go? What should I do?
By all means, go to my website, stcharleswealth.com. And in the coming weeks, announcements will be on the show soon. Sometime in the next coming weeks, we will have the Option Club meeting is coming back to St. Charles. We're excited about that. In our office at 303 East Main, we'll come together, and we won't have free Skippy's Euros, but we have something even better. Option discussion with live people. The only thing better than that's the option block.
Is there beer?
No beer.
Yeah.
Can I dress up as a Vega monster and scare everybody? Like wait under the tables and then jump out. And you'd be like, oh, the Vega monster. And everyone runs for their lives.
Oh, you know why? Because my clients, as well as my club attendees, as well as people that Mark teaches, we're not afraid of no Vega monster.
Well done. Well said, sir.
Are you a Vega buster, Mike?
We are the Vega Buster.
Ooh, that's a good name for the club. I like it. Vega Busters. Trademark that now, sir, before this goes out to the full podcast world. And Mr. Meatball, if I want to maybe get some recipes for some tasty meatballs, I want to buy some premiums, or indeed I want to perhaps take a masterclass. Where should I go? What should I do?
So we've just been approved by the Chartered Financial Planner, the Certified Financial Planner organization, CFP. Our next masterclass, Options for Investors, RIAs, and Money Managers, is now worth 12 continuing ed credit hours that you can apply towards your CFP. That is a ton of credit hours. And like we said, it's $9.97. Go to optionpit.com/master RIA master. But you sign up, I'll rebate back $300 for Option Insider CFPs. Go out and get those 12 credits for about $50 an hour. You cannot get continuing ed that inexpensive and that complex and valuable to you as a manager.
Yeah, the amount of people out there offering continuing ed for options-oriented stuff, you can probably count them on one hand. So get out there if you want to get them. You can spend that. You got to spend that money on something. You can spend it on how to diversify your portfolio into 50 different underlyings, or you could go learn about some options. I would recommend the latter instead. So you too could not be afraid of the Vega monster. Head on over to optionpit.com to do just that. Slay that. That should be your button. Slay the Vega monster. And also get yourself some premiums. All right, that's going to do it for this episode. I think I've said premiums enough here on this show. Thanks for tuning in, downloading, streaming, subscribing, sending in questions about premiums and all sorts of other good stuff. Keep them coming. We'll see you back for this show here again on Thursday, but we'll see you back here on the network a little bit later today. I believe around 4 p.m. Central, 5 p.m. Eastern to talk some crypto. So join us for that. Otherwise, we'll see you back here on Thursday for more of the Option Block. The
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.